In today's video, guys, we will be discussing 10 of the best ways to build your credit scores in 2023. Now, whether you have bad credit or no credit at all, this is the video for you. Stay tuned. If you're new to my channel, welcome. My name is Kelvin McNeil, and I'm the owner of GreenScale Credit. And over here, you will get the most valuable information without the fluff. Whether it's credit, real estate, or mindset therapy, you'll love it here. So join the family and hit that subscribe button. Right now, there are over 100 million Americans that can't get a credit card or a loan due to one of the following reasons. A, they're afraid of credit or debt because of lack of knowledge. B, they have bad credit due to past financial hardship. Or C, they either have no credit or a very thin credit profile. But not to worry, by the end of this video, not only will you have a better understanding of how credit works, but you will also know 10 new ways that you can build your credit scores. So I'm going to break these 10 recommendations into 2 categories, and each of those is deserving of its own video. So we got revolving accounts and installment accounts. Well, some of you know and some of you don't. So to simplify things, revolving accounts are trade lines that allow you to carry a balance from month to month, like credit cards or other lines of credit. A lender gives you a credit limit, and as long as you continue to make the minimum payment without going over the limit, you can continue to utilize the available credit. The minimum payment required typically varies based on the balance you owe. While on the other hand, installment accounts are trade lines that require a set monthly payment over time. Now, these are known as payment terms, and payment terms range anywhere from a few months all the way to 30 years. The most common examples are auto loans, student loans, and mortgages. But the biggest difference between revolving debt and installment debt is once a loan is paid in full, the account is closed. In comparison to when you pay off a credit card, the account stays open, and you may even be rewarded with a credit limit increase. Now, before we jump into the recommendations, I have to drop off this golden nugget. Guys, this is super important to understand. Having the right balance of trade lines along with good spending habits is a major key to developing good credit. I repeat, having the right balance of trade lines along with good spending habits is a major key to developing good credit. Payment history, credit card usage, and mix of credit accounts for a whopping 75% of your entire FICO score. So as I begin detailing these 5 revolving accounts and 5 installment accounts, it's important to know that you do not need to sign up for them all. However, if you don't have any open trade lines or any open accounts on your credit profile as it stands today, I would recommend you sign up for at least 2 revolving accounts and at least 1 installment account. Now, the specific number of trade lines you may need does depend on your credit profile as it stands. I'm going to start y'all off with the credit building debit card. I bet most of y'all didn't even know that existed, huh? The end goal here is to get tier 2 and tier 3 credit cards. You know, the cards that give you the special perks when you travel and huge cashback rewards. Ah, yes, the sweet life. The reality is you gotta crawl before you walk, baby. And most tier 1 credit cards are simply terrible. Let's keep it real. So I instead recommend taking these low risk alternative options. All right, guys. So the first one on my list is called Extra. Well, it's not extra. Like, I promise I'm not being extra. It's just called Extra. Extra is the first debit card that helps you build credit and earn reward points with no credit check, using your own bank. Now, here's how it works. Extra connects to your bank account, so there's no credit check, and you're spending the money that you actually have, right? Now, when you swipe your card, Extra spots you for your purchase, and then it pays itself back the next business day. This is huge, right? Now, at the end of every month, Extra will then add up all of your transactions, and they will report those payments to Equifax and Experian as credit-worthy payments. And this is, of course, how it helps you build your credit. Now, I chose to put Extra at the top of my list for these 6 reasons. The first is, of course, you're able to instantly earn points with every purchase that you make, which means you can get points for using like Uber or any other rideshare service, coffee, or even paying your phone bill. This way, the Extra card easily pays for itself. Now, with Extra, you're able to also build payment history by turning your everyday purchases into, again, those credit-worthy payments. And you're able to also use those reward points for stuff that you actually like by going shopping in their members-only reward store. Now, you also get to keep your own bank account because they are compatible with most banks in the United States. So you can keep your money where you want while spending smarter with Extra. And again, there's no credit check. That's the 3rd time I'm saying that because I know you guys are going to ask. So what happens is your bank balance becomes your spending balance. And lastly, there are no interest rates because Extra charges a flat membership fee. This way, you never have to worry about predatory interest rates, which can lead to, of course, more debt. Now let's talk about the pricing. Extra offers 2 membership levels, and since they don't believe in interest rates, all of these features I'm about to show you are all inclusive. So as you see here on the left, we have the credit building plan, which is only $149 per year. So when you really think about it, this is a great deal because most of your secured cards are going to require you to make a minimum security deposit of $200. So only $149 here. You get this debit card that works like a secured credit card. You still get the app, which is the Extra Spend tracking app. And you get the white glove concierge support, which is available to you 24/7. And you get the best looking debit card ever. Now, if you want the rewards, you can bump up to the rewards membership, which is only $199 per year, which is basically your typical $200 deposit. And for that, you get everything that you would get on the left, except you also get to earn reward points for every purchase like I was talking about earlier. And you also get exclusive access to the Extra reward store. Now let's talk about the difference between a traditional secured card and the Extra card. So on the left, as you can see, normally when you have these secure cards, they normally start you off with at least a minimum of a 17% interest rate, although I've seen them much higher than that. I've seen them as high as 29% on the APR side. Now, sometimes you also have a hard credit check. You may have to deal with some frustrating customer support, and you just don't get any reward points. Not to mention, I glossed over the very first thing, which is the security deposit. But on the right-hand side, we have the Extra card, which is a debit card that builds no security deposit, no credit checks for the 18th time. And you do, again, get that 24/7 customer service, aka white glove concierge. Plus, you earn reward points, which makes this a much better option. So if you guys are interested in applying for the Extra card, simply click the link above my head or go down in the description below to begin your credit building journey today. My second recommendation is the Varo Believe secured credit card. Now, this credit card option has 3 of the most desirable features of any secured credit card. The first is there's no minimum security deposit. Second, there's no annual fee or interest. And third, there's only a soft pull credit check, which means it's not going to hit you. It's not going to have a negative impact. You won't have a hard increase show up. The Varo Believe card is an actual credit card, but it does share similarities to credit building debit cards like Extra, except it's what I would like to call a spend card. Now here's how it works. You first open a Varo Money bank account, then you transfer money into that Varo Believe secured account. Then the money that you choose to put on that card will then become your credit limit or spending limit. Then you start spending, which you can spend anywhere Visa is accepted, and each payment will be reported to all three of the major credit bureaus, which is of course Equifax, TransUnion, and Experian. Don't you just love those guys? So please, I beg you, do not miss a payment. If you do, your scores will drop faster than Adidas dropped Kanye. I can bet you that.
It's really bad.
I've been broke before.
How were you broke?
What, you know?
The best way to avoid late payments is to use Varo's Safe Pay option. Now, Safe Pay will automatically pay your full balance at the end of each billing cycle, your full balance, not the minimum payment, which is great. Now, this should go without saying, but I gotta say it anyway. Do not spend money that you don't have.
Stupid drip, big drip.
This card is designed to help you improve your credit, not your drip.
Got some buy some sneakers.
You can also track your credit scores on the Varo Believe app, or you can go to my favorite website, which is MyScoreIQ, where you can get all of your industry scores, which is the FICO scores that creditors and lenders use to actually give you those approvals. So if you want that, go ahead and look down in the description below and sign up for just $1 and you'll get to see all of those FICO scores. Now, as we can see here, another comparison chart that shows the difference between the Believe card and other secured cards. Now, unlike a traditional secured card, there's no security deposit. Sometimes you do have to pay like $500 instead of $200. You're normally charged an annual fee. And then, like I said before, I've seen hard credit checks and APRs of well over 23%. But on the right-hand side, you do see everything that you would benefit from by getting the Varo Believe secured credit card. There's no annual fee, no security deposit, there's no hard credit check, and it does help you avoid runaway debt when you use that Safe Pay option because it'll automatically pay your full balance. And of course, it does report to all three of the credit bureaus. So guys, if you're interested in sign up for the Varo Believe secure credit card, make sure you head on over to their website at varomoney.com/credit builder. And that's credit-builder. My third recommendation will not be available to all of you, but it's too good to be left off of this list. And that is the Navy Federal nRewards secured credit card. This card not only allows you to earn rewards while building credit, but it has one of the lowest interest rates on any tier 1 credit card that I've ever seen. The APR does vary based on the US prime rate, but it's advertised at being around 18% on purchases and balance transfers. Now, again, most tier 1 cards are going to start at around 23 to 24% and they go up from there. Now, this is only available for members of the Navy Federal Credit Union, but if you or a member of your family is military affiliated, you definitely want to jump in there and become a member. The Navy Federal nRewards secured card has no annual fees, no balance transfer fees, no foreign transaction fees, and no cash advance fees, except there's a 2% APR increase when you do get cash advances. Also, you get 1 reward point per every dollar spent, and these points can be redeemed for cash, statement credits, gift cards, and other merchandise. But my favorite thing is you also get rental car insurance coverage when you use this card. Now, the way this works is you deposit at least $200 to your Navy Federal membership savings account before the application. And if you're approved, the $200 or however much you decide to put in that account will be used as your limit. All right. Now, Navy Federal will then begin reporting all of your payments to all three of the major credit bureaus, which again is Equifax, TransUnion, and Experian, those lovely guys.
No.
And as you begin wisely using this card, you will become eligible for an upgrade after your first 3 months. Now, the first upgrade includes a credit limit increase that does not require you to add additional money to your card. Then at 6 months, if you've continued to do a great job making on-time payments, they'll review your account to decide if you're then eligible to be upgraded to the Cash Rewards unsecured card. So if that happens, they'll then remove the hold on your security deposit and send you your new unsecured rewards card. Now, the Cash Reward cards that you'll get does have a much lower APR, and you'll earn now up to 1.75% cash back. Now, the end goal here is to work your way up the Navy Fed credit card ladder until you reach their American Express card, because Navy Fed does have an American Express co-branded card, which basically works as a backdoor to get you into the American Express network, which improves your odds of being approved for a flat out American Express card of your choice down the line. So if you're a member of Navy Federal and you're interested in signing up for this card, the link for it, along with everything else mentioned in this video, is in the description below. My next recommendation for building credit in the year 2023 is the Discover It Secured Card. I love the Discover It credit card in general. It's legit one of my favorite credit cards that I personally own, and it is by far the best alternative to Capital One. And I'll tell you in a minute why I say that. A lot of major credit card companies are starting to understand the importance and the value of giving opportunities to consumers with bad credit. And who knows, maybe even one day American Express will join the party too. The Discover It Secured Credit Card has no annual fees, no impact on your credit when you apply because they do a soft pull. They do have the standard variable 25.99% APR. But remember, guys, when you're using these cards, you're just using them with the purpose of building your credit. So you really shouldn't be carrying any balances from month to month. So paying the balance off at the end of each cycle will help you avoid paying interest in the first place. But the best thing about this card is the high cash back rewards. So let me break it down. First of all, you get 2% cash back when you spend at all restaurants and gas stations. Then you get 1% cash back on all other purchases. And lastly, this right here is why I was saying I love Discover, and it was one of my favorite cards that I got. Now, at the end of your first year, Discover will 2x your entire rewards balance. They will literally double it dollar for dollar at the end of that first year. That's an awesome deal. And unlike MasterCard, Discover is accepted at 99% of places, and here's how it works. Yes, you will need to make that refundable minimum $200 deposit. Then they'll send you your hard card in the mail. You begin using that card wisely to begin building payment history, and they will report to all three of the major credit bureaus. Now, after your first 7 months, Discover will begin reviewing your account monthly to determine if you qualify to be upgraded to the unsecured Discover It card. Now, when this happens, you will get your deposit back. So you don't have to worry about that. Just use it wisely and you will get it back. The Discover It Secured Card has a 4.6 rating, a 4.6 out of 5-star rating with over 2,300 reviews. So it's not just me that loves this card. If you're interested in seeing if you qualify for this card before you apply, there is a link in the description or right up here somewhere where you can go ahead and get your risk-free evaluation. And my fifth and final recommendation is Grain, the digital credit card. It's not your typical credit card. In fact, it's technically a revolving line of credit that will help you build in a unique way. The way it works is you first download the Grain app, that's Grain app, from the Apple App Store, or you can join the Android waitlist at trygrain.com. They don't have it yet, but hopefully it'll be out soon. They've been promising it for a while. Second thing is, once you have the Grain app downloaded to your phone or tablet, you can then simply connect your primary checking account. Then you'll get an instant pre-approval for a line of credit that will be based on your cash flow. What I mean by cash flow, I mean they're just going to check to see whether or not you have money coming in, not just only money going out.
Oh, is it hot in here?
And this will not impact your credit score whatsoever. If you're approved, they'll give you a minimum $1,000 line of credit or more. Then you just continue to use your debit card as you normally would, while Grain works for you behind the scenes. Now, unlike a traditional credit card, you will not make purchases with your available credit. Instead, you will withdraw money from your line of credit by simply transferring funds over into your personal checking account. So let's say you withdraw $250 from your $1,000 line of credit with Grain. This would mean that you have now used 25% of your available credit, and you are now responsible for paying back that $250 on time. No different than if you would have swiped a credit card for $250. Now, again, you should only use what you can afford to pay back within 30 days. Otherwise, you could end up hurting your scores due to high usage. Always remember, a good rule of thumb is keeping your overall credit utilization under 30%. However, 10% is best. Grain actually has a great 15% APR when you use the auto repayment feature. So I highly recommend using that auto pay to avoid any missed payments, late fees, or overdraft fees. Auto pay will make the minimum payment due each month. However, it's important to note that even if you're enrolled in the auto pay feature, you should always make sure that there is sufficient funds available in your checking account. Because even if you were to miss one payment, guys, your score could drop more than 75 points, because payment history does make up for 35% of your FICO score. Now, Grain also reports to all three of the major credit bureaus. The Grain app itself is simply beautiful. I love it. It looks really good. And it does have a 4.6 out of 5-star ratings in the App Store with well over 35,000 reviews. So it's safe to say that it is social proof. If you're interested, head on over to the Apple App Store or visit their website at trygrain.com. Now, those are my top 5 revolving accounts that you can use to build your credit in the year 2020.
I don't think that's right. It ain't supposed to be like that.
However, I'm also going to throw in an honorable mention, which is the Amazon Prime secured card. Now, I did make a full video about this, so make sure you check it out. I went into great detail about the benefits and features. If you love Amazon like I do, especially, making this video in December of 2022, we're in the holiday season and I got boxes coming every single day. I'm not going to lie. But if you love Amazon like I do, this is definitely worth considering. All right, guys, that's it for part 1 of my best ways to build your credit in 2023. I did highlight, again, my top 5 revolving accounts, But be sure to check out part 2 of this video where we'll be talking about my top 5 installment accounts, which is equally important. Hopefully you guys enjoyed this video and you found something even remotely helpful. If you did, show me some love by dropping a like, smash that like button so we can push this video out to more people just like you who may need this help. And as always, I hope you guys enjoy the rest of your morning, afternoon, or evening, whatever time of the day it is. Thanks for watching.